Have you stared at a browser full of overlapping lines, paralyzed by the clutter? Today, we turn that noise straight into clarity. Professionals separate their workspace from their web browser. They use the TradingView desktop app to create a dedicated, distraction-free environment for analysis. In this session, we are going to build a step-by-step system. You'll identify fair value gaps and liquidity zones, plot exact trend lines and Fibonacci levels, and execute your trades. By pairing these trading methods with the built-in paper trading simulator, you can test and refine this strategy without risking a single real dollar. Step 1 is isolating your focus. When you close your browser tabs and open the TradingView desktop app, you cut out social media and news feeds, giving you a clean space to read the market. Navigate to the Layout Setup menu in the top right corner. Select the two-chart layout to monitor multiple timeframes simultaneously. Now, find the Drawing panel on the left toolbar and click the Sync Drawings Globally button. This is a step many people miss. With global synchronization active, any level you mark on your hourly chart instantly appears on your 5-minute chart. This keeps your data consistent and prevents you from making decisions based on outdated or missing lines. Focus on these long wicks on the chart. They show where buyers or sellers aggressively rejected a price. Equal highs or lows here form liquidity, where retail traders place stop losses. Institutions push past this line to trigger stops, then reverse, creating a liquidity sweep. Immediately following that sweep, the market often moves so rapidly that it leaves behind a structural imbalance. We call this a fair value gap. To confirm a fair value gap, we need a 3-candle pattern. Candle 1 is the baseline. Candle 2 is a massive move, creating an imbalance. Candle 3's wick falls short, leaving an empty space. This gap is your high probability entry zone. By waiting for this gap to form, you stop chasing volatile breakouts. You let the market reveal its hand, setting your entry point exactly where institutional momentum resumes. Now we need to map our boundaries. Use the left toolbar or press Alt+T to select the trendline tool and draw lines connecting your major swing highs and lows. Next, press Alt+F to pull up the Fibonacci retracement tool. Drag it across the most recent price swing to measure exactly how deep the upcoming pullback might go. Select the text tool from the toolbar and place a label directly onto your chart. Type out FVG entry zone right over the gap we identified earlier. These text labels act as visual sticky notes. When volatility spikes, reading your own instructions forces you to pause and rely on your analysis. This physical process of marking levels and writing notes strips the emotion out of your trading. You convert a chaotic feed of numbers into a clear, executable roadmap. You don't need to stare at the screen waiting for the price to reach your zone. We can automate the waiting process by setting a price alert directly at our marked fair value gap. To set this up, simply right-click the FVG box you drew or press Alt+A on your keyboard to configure the notification conditions. With the alert active, look at the trading panel at the bottom of your screen. Click the paper trading icon and hit Connect to activate your risk-free simulator account. Open the order ticket panel. Since we know exactly where we want to buy, select a limit order and set your entry price squarely inside the fair value gap. Before you hit Execute, you must check the boxes for your stop loss and take profit. Define your exact risk parameters while your head is clear. This workflow creates a closed, stress-free environment. Your alerts handle the timing, and paper trading handles the execution, letting you safely test your logic. Look at your completed workspace. You have a synchronized, multi-timeframe layout, clear annotations, automated alerts, and a pending limit order ready to trigger. This isn't guesswork. You are tracking the same liquidity sweeps and fair value gaps that institutional traders rely on to navigate the market. Your next step is repetition. Keep executing this exact process on the paper trading simulator until you have a documented track record of consistent, profitable setups. Mastering this structured environment is the difference between hoping a line goes up and executing a calculated professional system. Follow the steps, trust your analysis, and trade your